Hello, fellow traders. 'Tis I, the rumpled one, coming to you on Monday, December the 7th, the year's 2020. Let's talk trading. Preserving capital with Walmal. Before we get started, let me remind you all that these videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, we had some good offline chats about preserving capital. Let's tell the fellow
We do.
traders.
Yeah, we do. The reality is it's one of the most important things about trading. We talk about risk and your possible reward from that. We talk about methods, either to get into a trade or methods to get out of a trade, your entry, your exits. We talk about all those things, but the reality is what's the most important tool that you have in your toolbox as a trader? It's capital, because without capital, you can't do anything. You can have the greatest methodology for entry and for exit. You can have the greatest, system in place for making sure that, you're not going to go and get yourself into trouble. But if you got no money in the bank, you can't trade. And so it's the most important tool, I guess, as they would say, it's the most important tool in the woodshed, right? And so for that reason, I consider the most important thing that I do anyway in trading is preserving capital. And, Avery sometimes, or he'll go and look at me sometimes and like, why are you exiting out so soon? It's like, yeah, that's probably a little bit earlier than what my trading plan says. But the reality is I need to preserve capital, and I need to go and make sure that I can come back and fight another day. And because without that capital, I can't fight another day. And so that's why it's so important for me. And if we were just both in a trade just a few minutes ago, and what happened was we went and took a trade. I think it was at the 38 line, if I recall correctly, and we both took longs there. And I think Piero, he got in a little bit earlier than me, and I got in a little bit later, but we basically got in at the same point. And I was up 4.6, and I just immediately went and punched out as soon as I hit 4.6. And probably wasn't the smartest thing to go and punch out at that point, because now if you look at the charts at this moment in time, we're right now on my charts anyway, we just hit 57.6, and we actually touched the 60 line. So I could have made a whole lot more pips. But here's the reason why I went and did that. We had gone through and sat through a very long period of time where we were going up and down. We'd be up a pip, we'd be down 3-4 pips. We'd be up a pip, be down 3-4 pips. And because the market was looking like that, I needed to go and trade what I saw. I saw myself sitting there with 4.6 pips in the bank. Okay, I'm at it. I'm going to preserve the capital. I don't want to go negative. I don't want to be down just sitting in a trade where I lost 4 pips when I could have been sitting there with a trade where I made 4.5 pips. Now, that type of trading may not suit everybody because, other folks, trade differently than that. But with my method, that's just the way I go and do it because I need to go and preserve that capital.
Yeah, and actually, you got in better. You were in at 38 flat, and I think I was in at 38.3 because we used different brokers. And yeah, we set through, let's see, how many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We were like 12 minutes after we entered or so. That's when we saw profit again. And we were talking about, oh,
Right.
we could have taken a pip, we could have taken a half a pip or whatever, and we both just sat there. And then you punched out early, and then I just said I'm going to let it ride a bit, and then I put my 2 pip trailer in right around 50, and of course it punched me out at like 48 or 47. um, but the thing that I wanted to talk about was how you were looking at the overall portfolio money. So in other words,
Right.
once, and I said this is kind of an interesting way to look at it, as opposed to saying I'm up X number of pips in the trade, and I'm going to move my break even up. When you look at your portfolio, you go, hey, I'm up this many pips from the day, so I'm going to make sure I don't go negative that day. And so
Exactly.
you're looking at two different things. You're looking at the trade and at the portfolio. So if your trade PL goes from green to red, um, you may or may not punch out based But if your portfolio is starting to go from the daily start, if that starts to look like it's going to possibly dip negative, you'll probably punch out, and then you just inch your way up. You know, you're up 10 pips for the day, maybe you'll or 20 pips for the day, and maybe your trade's given back 3 or 4. You wait it out, and like you said, you saw a +5, boom, you take it, you stack on, stacking bricks as we talk
Yeah,
about.
that's exactly right. I mean, there was a point today where I was up 19 pips for the day, and then I took a loss of 4 pips. And the reason why I took that loss of 4 pips is if I would have waited, I actually would have probably ended that trade in a profit. But I just, I'm looking at that and saying, okay, I'm now down to only being up 15 pips for the day. My core requirement is being up 10 pips for the day. I don't want to take a chance where I get below that. We're starting to get close to that level. At the end of the day, the most important thing is that I've got, my column is green and not red. And so I just wanted to go and protect that. And then what happened at that point is I took another trade where I got 1 pip. That's all the market was willing to give me. I took my 1 pip. But then the next trade after that, I lost 3 pips. Okay, so now I'm down 6 pips from where my high was. But then I kept on being consistent. I won 2.5 pips. I won 4 pips. I won 4.6 pips. And so now I'm well above where I was at that 19. But it all came down to this whole idea of I want to preserve the capital as best as I can. So at the end of the day, I've got more money in that account than I had at the beginning of the day. Because that's what, to me anyway, that's what matters most, is making sure that at the end of the day, I got more money in the portfolio than I did at the beginning of the day. And yeah, I could have at that 19 pip trade, I could have let it run down. I think would have had to let it run down 20 pips on me. So I would have went from a portfolio where it's up 19 to actually being down a pip. That's not so good for me. I don't feel so good doing that, and so I won't do that. Now, there are other traders out there, professional traders out there that, say you don't look at that. You can't look at that. You got to look at each individual trade separately from each other, But what I'm going to say is that for me, I know my psychology. I know me. I know how I think. I know how I react. And because I know myself so well, that's why I don't let it do that. I've got to go and keep a tight rein on it. Somebody else can go and say, you know what? I know it's part of trading. I may be up 20 pips and actually end the day down a negative pip, but tomorrow I'll be up 40 pips because I went and took the same risk. Personally, I can't go through that. I'd rather just go and sit there. I'm going to cut my losses, cut them early, and then just look for the next opportunity. And hopefully the next opportunity will go and make up what I lost.
Yeah, and I really think that that's the key part, because if you don't manage the money and you don't manage yourself, there's no the trade management pretty much goes out the window. And that's one of the things that we joke about. It's like you weren't trading the chart, you were trading your emotions. You want to get out because you were stuck in the trade. I'm not saying you, Walmal. I'm just saying the proverbial you. And the thing about it is, you have to recognize when you're literally managing your emotions, because it's like it's that feeling of being in a loss drawdown. Yeah, that sucks. But the thing is, if you remember from a few videos, it's like you need to erase that emotion. You just need to sit there with no emotions, whether you're down 1 or 10 or whatever it is, and just say, what do I see on the chart? What is the chart telling me? Not, oh, I'm down and I feel bad. Because as soon as you click into emotion, your logic side turns off and you miss opportunities on the chart.
You're exactly right, and you can miss opportunities either for a next trade that's a really good setup, maybe even better than than the previous one. Or the other thing is, if you're in another trade, you're not seeing your opportunity to get out with the maximum profit or least amount of loss that you would have because your emotions have taken over. And so what I've done in my own personal trading plan is what I've done is I've got I've got lines in my chart, sort of like lines in the sand. I'm not willing to cross this for a particular trade. I'm not willing to cross this for a particular day, and I've got those lines laying out there. And by having those lines laying out there, I'm able to control my emotions better than previously to not doing it. In the past, I wouldn't do that. I would just go and say, I'm allowed to go and lose 2 trades in a row. Well, losing 2 trades in a row is not the same thing as saying I'm willing to go and lose, $50. I'm willing to lose $50 on this trade. I'm willing to lose, $200 for the day. Whatever those lines are that you personally lay out there. For me, that's what works. Is because, those are real dollars going into my pocket that's going to go and pay the electric bill. And so that's why I go and look at it that way. It just makes it easier for me to go and have to have those goalposts out there to know, okay, hey, you know what? I'm just not doing well today. I don't know if it's because I'm not feeling well, the market's doing something strange today, or it's because, it's just happenstance, and that just happens. And you have to go and draw lines in the sand. I'm just not going to do it, and just end the losses where you can end them. And at the same time, what's great about that, especially if you have those type of things in place, especially, for your stop loss for your particular trade, is that you're able to come back maybe on that same day and maybe make it up. And I'm not saying revenge trade it. What I'm saying is, I got another proper setup, take the proper entry, take the proper exit on it. And if you keep on doing that, most times you'll actually be able to make it up. I can't tell you how many times I've gone into a day where, first trade out of the box, bam, it just seems to hit me, hits me in the head, and next thing you know, I'm down, and now I got my first job of the day is actually to go and come back from a loss. And it's funny because I tease TRO all the time that what I should really do is the first hour of trading, I shouldn't really trade live. What I should do is, open up a demo account, trade the demo account for the first hour, get my act together, and then trade the live account, because so many times I have to go and trade myself out of the mess first hour out of the box.
Yeah, we were joking about that, but I think this video, I think I might write a little money management indicator where it's like the indicator will look at your beginning balance when it first turns it on, or for the day, and then it'll say, okay, if you go, X number low, it's like, the skull can come on there. It's like, okay, it's time to quit. Or it's like if you're up 10 pips, if you're up 10 pips and now you're for the day and then you've just given back half, maybe we have it say, hey, you just gave back, X% of your profit or X pips of your profit. Is trading a hobby or a profession?
Right, exactly. One of the things I do is, I'm a very, very big supporter of the, keep it simple. Keep it simple, silly, or keep it simple, stupid, however you want to say it.
Right.
Methodology. And so I try to keep my lot sizes consistently the same throughout the entire day. And that way I know that if I'm down X pips, I know exactly what I am down in terms of dollars.
Right.
If I'm up whatever, it's the same thing. And it just helps me preserve that capital better.
Right. And for the day, we're at I was going to say for the day, the daily range is in the 95 percentile at 213 pips.
Yeah, today's been a crazy day. I mean, I don't know what the range of the day is, probably about 215, something like that, I would guess.
213, on my chart.
It's 213. Yeah, 213 on mine. It's just been a crazy day, an up and down day, but man, it's been a heck of a day. But the thing is, on a day like this, you'd say, I got to be able to make money. Well, if you don't have the proper, money management in place, not only could you make money, but you also get slaughtered pretty badly too. So that's why it's so important to have, have your trading plan in place, have all those things, have all your stops in there, to stop you from getting into a rut. Because here's the reality. Let's say you went at the beginning of the day, you went long, and you could have been up, 20, 25 pips or something, and then it could have turned around on you, and then, literally dropped 200 pips on you, and just wasted you. And if you didn't have those stops, what do you think is easier for you to get over? A 10 or a 15 or a 20 pip stop, or a 200 pip drop? And the 200 pip drop very easily could wipe your entire account out. And like I said in the very beginning of this video, You know, if you have, you know, if you don't have those type of things in place and you're not trying to preserve your capital, next thing you know, you can't trade tomorrow.
Okay, boys and
Open up a
girls.
demo account.
Yeah, just remember, it's not what you trade, it's how you trade it. This is the Rumple one, over and